Is history repeating itself, or are we facing a completely new financial beast? Today, I'm going to dive deep into the eerie similarities and striking differences between the great financial crisis of 2007 through 2010 and today's economic tremor shaking China to its core. From towering debts to teetering real estate giants, we're unraveling how these shocks could ripple across the globe. Will the U.S. brace for impact, or can it dodge the financial tsunami headed its way? Stay tuned as I explore the seismic shifts that could redefine the global economy. Haven't heard of the issues in China? Here's a quick rundown. Markets have been melting down, like the CSI 1000 index down 6% in one day. China A-shares ETF down 45% since December 2021. Additionally, the premier consumer company Alibaba has dropped 80% in 2 years. The government has restricted short selling, and now there is a bailout package in the works in Beijing. Other signs of the meltdown are negative growth, labor costs soaring to the point making China non-competitive, large developers missing interest payments, eye-watering leverage. Sound familiar at all? In a world where economic fates are intertwined, the rumbling of a crisis in one nation can echo across the globe. Today, take a peek at China's mounting economic challenges and compare them with the shadows of the past great financial crisis. Are we on the brink of a global economic shakeup, or is there a path to avert a looming storm? The great financial crisis of 2007 to 2010 reshaped our world, reminding us of the fragility of the global economy. Fast forward to today, and the economic giant China is facing its own crisis, a crisis born from towering debts, a real estate bubble on the brink of bursting, and a government grappling with the balance between growth and stability. The U.S. housing bubble's burst was the domino that toppled the global markets in 2007. It was a crisis made in the West, but felt worldwide. Today's crisis germinates from the East, within China's real estate sector, symbolized by the struggles of giants like Country Garden and Evergrande. The giant developers have shown huge losses and had some issues making their payments. If you miss a mortgage payment, you're going to have an issue. They miss a $1 billion payment, they're going to have a major issue. But what fueled this? A combination of aggressive borrowing, speculative investments, and an unprecedented regulatory crackdown aimed at reining in the excess. No economy is an island, especially in today's interconnected world. The great financial crisis taught us about the contagion effect, how a crisis in one part of the world can spread across the borders with ease. With China being the second largest economy, the stakes are even higher. The immediate fear that a slowdown in China could trigger a global supply chain meltdown, affect commodity prices, and dampen economic growth worldwide. Now, let's pivot to the U.S. real estate market. Unlike the prelude to 2008, today's market is buoyed by stricter lending standards and a significant housing shortage. Yet the rising interest rates loom large, threatening affordability and potentially cooling the market. Could a faltering Chinese economy be the straw that breaks the camel's back? Or will the U.S. market's unique dynamics shield it from the worst? We have seen that the real estate markets have been resilient over the last couple years, as many have called for a crash. History has shown us the power of swift and decisive policy action. Post GFC, global leaders unleashed a wave of monetary easing and fiscal stimulus. China, however, is treading a more cautious path, balancing between stimulus and regulatory reforms. Recent talks are propping up the market with $282 billion. The mere talk of the injections has the equity markets popping again. The question remains, are these measures enough to stave off a crisis, or merely a band-aid on a wound that requires surgery? While we navigate through the complexities of the economic certainties, it's crucial to remember that with every challenge comes opportunity. For U.S. real estate investors, the current climate presents unique prospects to innovate, diversify, and grow. First, the shift towards remote work has transformed the landscape of residential and commercial real estate. Suburban and rural areas are experiencing a renaissance as demand for spacious, more affordable homes rises. Investors can capitalize on this trend by focusing on markets with growing populations and infrastructure development. The economic volatility has heightened the appeal of real estate as a tangible asset class. Compared to the short-term ups and downs in the nature of stocks and bonds, real estate offers a dual advantage of appreciation and the potential passive income through rentals. Let's not overlook the impact of technology advancements. PropTech, or property technology, is revolutionizing how we buy, sell, and manage properties. Savvy investors are leveraging these tools for data-driven decision-making, enhancing efficiency and profitability. The diversification within real estate itself, from residential to commercial, industrial, and retail, provides a buffer against market volatility. Specialized sectors like logistics and e-commerce warehouses are booming, driven by a surge in online shopping. We all see it, we all do it, Amazon. The potential for redevelopment and repurposing project is vast. As the function of city centers and commercial spaces evolve, investors with an eye for innovation can transform outdated properties into vibrant community hubs or mixed-use developments. We're seeing it firsthand here in the city of Atlanta. In the face of economic tremors, forward-thinking investors see landscape ripe with opportunity. The key is to stay informed, adaptable, with its enduring value and potential for innovation, stands as a beacon for those looking to build wealth in uncertain times. As we stand at the crossroad of history, the lessons of the past loom large. The great financial crisis and China's current economic challenge offer a stark reminder of the global economy's interconnectedness and the need for vigilance. But it's not just up to policymakers and corporations. God forbid, do not let that happen. As global citizens, staying informed, understanding the risk, and preparing for potential economic shifts is crucial. Together, we can navigate these uncertainties of tomorrow. We have discussed the intricate tapestry of the economic challenges and opportunities, from the lessons of the great financial crisis to the unfolding situation in China. But the conversation doesn't end here. What are your thoughts on this global economic dynamic? How do you see them impacting our future? If you found value in this video today, please do me a favor. Don't forget to hit the like button, subscribe to the channel for more in-depth discussions. Your engagement helps us dive deeper into the issues that matter most to all of you. Together, let's build a community that's informed, insightful, and ready for whatever the future holds. Do me a favor. Hit the subscribe button. I appreciate you watching. Thank you very much. I wish you the best. That's another guaranteed video.